Welcome to QuickBooks tutorial where we show you how to use QuickBooks for different line of businesses. So in this video, I'm going to teach you how to create an invoice for drop shipments from vendor in QuickBooks. So I see a lot of people having issues on how to create invoice for their drop shipping business. So what is a drop shipping business? A dropshipping business is that kind of business that does not require you to stock inventory. All you need to do is to partner with a vendor, and then when customers makes an order, they pay into your account, and then you send the details of that customer to the vendor and get the vendor to do the delivery directly to the customer. So that requires zero inventory. So how do you create an invoice for this type of business? Because I see a lot of times people treat the invoice as if they own the inventory, and that's wrong. So here you have the cost outline of what we're going to be discussing. Here I'm going to show you how to set up chart of account for a drop shipping business. And then we're also going to answer a question. Should I add inventories that I'm selling as a drop shipping business or not? So we'll discuss that. Number two, I'll also show you how to treat drop shipping item, drop off shipping items. Then we'll look at how do you treat your direct costs. So what is your direct cost for a drop shipping business? We'll also need to discuss that. And then we'll look at how to create customers' accounts and their receivable balances, how to create vendors' accounts, how to add your bank accounts, including foreign currency if there's any, and then how to categorize your dropshipping business by product, segment, and location. We will then also discuss how to activate your sales tax. And then, most importantly, I will then teach you how to create invoice or sales receipts for drop off shipping business. So, why is this important? It's important because if you don't get it right, system may not give you the actual reports. And a lot of times, system might even be showing you negative balances on your inventory because you most of dropshipping businesses that I've reviewed, they tend to post the inventory himself on their QuickBooks. So we're going to answer that question. And then how to receive payment, then record business expenses, then banking transaction. But the most important part of this section basically is how to create an invoice. But before you create an invoice, there are basic setup that need to be done. You don't just jump into QuickBooks to start posting transaction. You have to get the necessary setup because the transaction you need to post depends on the setup. So if you want to create an invoice, first you need to have the customer set up already. You want to need to have the product or item set up. So how do you set up the product or item? We'll discuss that too. So and then receive payment. So you see that I'm not just jumping into create an invoice straight up, but I want to show you the basic setup you need to create the right invoice. So that is exactly what this video guide will show you. So let's go back to our QuickBooks. So here's a sample company that I've created. This is a sample company owned by CC Class Fashion. So CC Class Fashion, for instance, is an hypothetical business that engages in sales of fashion products. So they partner with top fashion brands. So let's say they've partnered with Victoria's Secret, and then their business basically is to take orders from customers and then have Victoria's Secret send the product directly to their female customers. So how do you treat these products in QuickBooks? So first, let's discuss the chart of account section. Now, chart of account is very important because it's an account that categorizes all your transactions to income, expenses, asset, or liability. You can see how our chart of account looks. We have more of expenses because we selected fashion. So let's expand this chart of account by adding different account heads. First one we want to add is our bank account, which we're going to use to receive the money. So you click on bank, and then so let's say we want to receive the money into JP Morgan Chase account, Chase Bank, I mean. And then what is our opening balance? So you input your opening balance here. What's the opening balance day? So let's say we're starting as at the end of July. That's our opening balance date. So you click close. So here we have it. So we can as well add another bank account right here. And then, so let's say this one, we have Bank of Hawaii. And then, let's say we have 130,000 USD. And then as at the end of July. Then you click OK. And then you click Save and Close. So let's say this is the bank account sales fashion maintain. Now remember, we've not activated multiple currencies. So let's quickly activate multiple currencies. It's important you activate multiple currencies so that the system will give you repostate the currency that you sell each of the products. So here, let's say it's US dollar, and then you click OK. So we're activating our multiple currencies in QuickBooks. All right. So now that we've activated multiple currency, then we can then add our foreign bank account. So let's assume again that Stacy Fashion doesn't only sell to customers in the US, they also sell to customers across globe. Maybe let's say in Europe, say in Africa. So you come to bank, you click continue, and then you come back here. So let's say we have First Bank of Nigeria. So let's assume they have a local or they sell to customers in Nigeria too. Then view more currencies. So this is more or less like an international dropshipping company or dropshipping business. So remember, they don't stock. That's one good thing about the dropshipping company. They don't stock inventories. So same end of July, you click OK, and then you click Save and Close. So then I can create as many accounts. So let's say Bank of Canada, for instance, new bank, or let's say First Financials. What country is this? Canadian dollar. Let's say there's no money there. So you can create as many bank accounts in different currency. That's why we have to activate multiple currency. Now, once you're done adding your bank account, the important thing to do again is to add your income head. So what is your income head? You select, go back to chart of account, and then click on income, continue. So your income head is how do you generate money? You generate money from sales, right? So you come here, you impute sales. Now, rather than calling it sales, you could say sales commission or margin on sales. You can say sales commission or margin on sales. So you come here, I can say sales commission. So I'm the one that determines my commission on that sale. So here, sales commission, which is an income head, right? You create it. Now, this is one of the major setup you need to do. Your income head is your sales commission, which is the money you add to the product that you are selling. Very important. Now, remember again, you are taking people's money. That's what it means. The money that is paid into your account, it's not your own. It belongs to the vendor. So you're receiving money from your customers on behalf of your vendor. And then once you receive that, you're going to remit the money to your vendor. You can see the workflow. Money comes to your account and then you remit it to your vendor. Let me take that again. Money comes to your account and you remit it to your vendor. So that means at that point where the money comes to your account, it creates a liability account because it's not your money. So here we're going to add a new account head right here. So you go back to bank, sorry, not bank, I mean. So here this is going to be your account, other current liability. So it could be account payable. So you track money you owe to vendors for purchase made on credit. This one is you buy from them on credit, but here you're not buying from them on credit. You're receiving on their behalf. So I like to call it other current liability. So here, so I will say trade payable to vendor, vendor's account. Now, as at the point where you're setting up QuickBooks on your record, do you have any trade payable? That's another question. As at the end of July, are there money you're yet to remit to your vendor? If there is none, you leave it. But assuming you still have a balance, as at the time we're setting up this QuickBooks, you enter that balance here as your payable. That's also another thing you need to factor into consideration when you're setting up your book. When you're setting up your book, you need to make sure that every outstanding balances are taken care of. So right now that I'm setting up QuickBooks, am I owing our vendor? That's the question. If I'm owing the vendor, I'll enter there. But if I'm not owing the vendor, you leave it like that. Then you click save and close. So we have that already. So this is, I think you can then add other heads like your expense heads, maybe your payment for salaries, payment for rent, blah blah blah. But the most important setup I want to do here is the fact that we've entered a bank account to receive the money, number one. Number two, we've entered our sales commission account. And then number three, we've set up our trade payable to vendors account. We've done that already. So when you do that, then you are good to go to the next stage. So let's go back to our outline to explain that. So here, should I add inventories or not? This is the most important question that every dropshipping business wants to know. Should I add inventories or not? Should I add inventories or not? Now remember, when you are running an inventory based business, when you run an inventory based business, you are supposed to keep track of your inventories. If you've watched some of the videos that I've posted on this channel, from retail based business to that of an auto parts business, you would notice that because we own those inventories, then it's important for us to add those inventory on our system so that we'll be able to look at the inventories we have in store. But a dropshipping business is completely different. You don't own the inventory. You don't have any in store right now. It's not your own. Do you get the point? So why would you want to set up an item that doesn't belong to you? Do you understand? It's not your own. So it will be extremely wrong for you to add inventories of this dropshipping to your account. No, they are not your own. So the question is, should I add my inventories or not? Don't add your don't should I add the inventories? No, you are not supposed to add the inventory. You are not supposed to add the inventory. Who the inventory is supposed to be accounted for in the vendor's record, the vendor's book, not your own book. It's only when you buy the inventory from the vendor and then you store, hoping to resell, yes. And then it's only when you take the inventory from the vendor store and then keep it on your own, hoping that you're going to be selling it directly, that's when you account for that inventory. But as long as the inventory is not in your store, you don't you're not supposed to add them to the QuickBooks as inventory. So if I'm going to add um, those inventory right here, I'm not going to add them as inventory parts. I'm going to add them as a service. So what I'm doing is I am providing service to the customer. Yes, the customer might think I own them in dropshipping. Most customers think that the vendor owns the product, not knowing that they also have a sub vendor or a subcontractor that's responsible for shipment. Some of them might even have an agreement that, oh, when you're shipping to my customer, brand it so that the customer will think I'm the one sending it to you. But in your own book, that inventory will not be treated as inventory. It will be treated as a service. What you're providing is a service. You are helping people source. So more or less like you are helping people to source for products. So that's like an outsourcing service. That's what you're rendering, but we call it drop shipping. So when I go back to item, I'll select new. So what am I selling? I'm providing service. So I'll come here, I'll click on service. That's what I'm selling. Service. Now, it is under this service that I'm going to add the name of the product. Now, why should I add the name of the product? I want it to display on the invoice. So that when I send an invoice to the customer or when I send a sales receipt, it will display the name of the item they bought. So the customer will see it like I'm selling a product to them. But in my book, it's not product. If it's a product on my book, then I'm going to treat it as an inventory part. Now, the moment I select inventory part, system would ask me to impute the quantity on hand. So that now leads us back to what we said earlier. Do we have it in store? Do we stock this inventory? We don't stock them. So there's no need to add them as inventory parts. So you're going to select service because what you're doing, you're actually selling a service. Then, so let's say you sell female top. So female designer top. So let's call it female designer top right here. Now, this is it. Now, this service is used in assembly or is performed by a subcontractor. So, like I said, you don't outsource them. Now, because this particular service is, like you can see here, is outsourced from another partner, another vendor. So here we're going to add the vendor name here. You can see that's the name of the vendor, Victoria Security. You can see here. Now, if you have an actual cost which you pay the vendor, you can then impute that actual cost right here. So that when you are selling that item to a vendor, system would have already taken into account. But look at this again. If I click on actual costs right here, it will make sense for me to enter the cost of that item for now because the cost might vary. So it's better we leave it the way it is. But here's the most important part of this setup. Here's the most important part of this setup. As we are doing this, remember, this particular income head, the money we're going to receive from the customer right here will go to our account, right? That's one. Number two, when we receive the money, we're not supposed to recognize all the money as our income. We're not supposed to recognize all the money as our income because we're supposed to remit the part of that money to the vendor. So that means the second leg of this account should not be an income. The second leg of this account should be trade payable to vendor accounts. So the moment you sell this product, the whole money automatically hit this trade payable to vendors account. Now, because you have a commission on that account, because you have a commission, you can then take the commission part of this money, which is what you're going to recognize as an income. Now, for some businesses, I don't want to show the commission on customer's invoice. I want the customer to see the cost of the product and then the commission will be hidden. That automatically means that would have to create a journal entry for that. So let's proceed. I'll click OK. So we've done female top. So let's try another thing entirely. I'll go to new. I'll click on service. And then, so let's add female jeans. And then the same setup also applies trade payable to customers to vendor accounts. So you can see that ordinarily some accounts will require me to some setup will require me to select the customer, sorry, the income head. I mean, but right now I'm selecting the access current liability. They actually have the same credit balance. Do you understand? Income and liability have the same credit balance, credit. But when you select an income depends on the nature of your setup. So, but this is a drop shipping business. So I have this. So this is how to set up your inventory for for drop off shipments. You can see here. So they are set up as service, not product, because you don't own them. The moment you set them up as inventory parts, it would ask you for quantity and then you miss it automatically. So we've been able to answer the question on drop off shipments. Then you can see the next one, how to treat drop-off shipping items. We've discussed that. I think we said that you're not supposed to treat it as an item, and then we've discussed how to do this. Now, how do I treat the direct cost for drop-off shipping? How do I treat the direct cost for drop-off shipping? How do I treat direct cost for drop-off shipping? Now, let's also go back to the QuickBooks. Now, the direct cost of your drop-off shipment, the direct cost of your drop-off shipment is what you pay to your vendor. Do you understand? The direct cost of your drop-off shipment is what you pay to your vendor. So let's go back to our chart of accounts. So you can see we already have cost of sales already. So you can then right click. So direct cost number one is cost of adverts, advertising and promotion of that item. every cost that you incur that is connected to the sales of that item. So advertising and promotion, maybe like Facebook ads, or let's say social media ads. So you click OK. So social media ads, maybe direct cost of, maybe cost of advertising on Facebook, WhatsApp, blogs, influencers. So those are the things that makes up your direct costs. So let's move on. Then, how do I treat customers' accounts and their receivable? So the same thing. You go to Customer Center in QuickBooks. You go to QuickBooks and then you click on New Customer. So let's say you sell to different customers. So here you can say you sell to Miss Jane Michael in USD, and then you click OK. So Miss Jane Michael US. Click OK. So we've done that. So I'm sure you know how to set up your customer. So let's not dwell much on this. That's not the basis of this training. Then let's go back to our course outline. We've done multiple currencies. We've added a vendor. So categorizing your dropshipping business by segment or location. Now, when you sell to different customers in different location, it's important that you categorize your transaction by location so that you will know which location is giving you more sales and then help you streamline your investment or your advert. So you go back to class. So you're going to activate class. So we use class to do that. You go to list, class list. So here we're going to add different locations. So we have customers in the US, we have customers in Africa, so and then we have customers in Europe. So you can use this to segment your operation. The essence of this is to help you track the performance and profitability of your sales by region. So that is the essence of doing that. So let's move on to the next part. Activate sales tax for your dropshipping business. Yes, when you sell to your customers, you're required to charge VAT or sales tax. So here you activate sales tax right now. So let's say we add sales tax item, so we call it sales tax, and then our sales tax item with, let's say, 12.5%, and then our sales tax agency IRS, then tax agency, click OK, we click OK, and then click OK. So we've done that already, and then now we are actually going to do the pain. That's the proper thing. What actually brought you to this video, which is how to create an invoice or receipt for a drop shipping business. You can see that I didn't just go straight to create an invoice. I wanted to do the normal setup. I wanted to do the right setup because you don't create an invoice without setup. And if your setup is wrong, your invoice will be wrong. So let me show you how to create an invoice for a drop shipping business. You go to create invoice, you select the customer you're selling to, right? Then you select the item. It's buying this item, buying this item. Now, how many of this item? Let's say 120 and then 100. Can you see? Now, what's the price each for this item? Let's say 59.8. And then this item right here, $120.5. So, and then you're going to track tax. So, where is this customer? Let's say in Europe. So, let's say in the US and then in US. So, tax, this is it. Now, remember, when we create an invoice for this item right here, this is not our money. This is actually not our money. So you need to note that part. This is not our money. So what are we going to do? We are then going to, there are two options. Now, it's either you've already accounted for your profits in this pricing right here, in this pricing. So you just invoice the customer this amount. You just invoice this customer this particular amount. So if I invoice this customer this amount, then I will then use journal entry to take out the portion of this money that belongs to me. I'll use journal entry to take out the portion of this invoice that belongs to portion of this invoice that belongs to me as a business. So I'll click on save and close. So if I go to my book, go to reports. Now you will see that under reports, can you see it's not recognizing anything as sales. Do you understand? Because the money is not your own. It's not your money. You only collected money that belongs to someone else. That's what dropshipping business is all about. Now, how do you recognize the portion of that money that is your own? Out of the 19,000, what's your cost? What's your own income there? So you go to company, make journal entries, and then so you can see three. So that money goes to this account. Let me show you reports, balance sheets. You can see where that money goes to right here. You can see here 19,226. Now it's coming as receivable because we're here to receive payment. So let's quickly receive payment. Receive payment from the customer, which is this. Receive all the amounts, then click on this, then record deposits. So we are receiving the money into our bank account, and then we're receiving into Bank of Hawaii account. So let's go back to our balance sheet. Now you can see here, let me refresh the balance sheet. Reports, balance sheet. Now you can see right here, this is a trade payable to that vendor, 19,000. Then this is the money is sitting in our bank account, which is Bank of Hawaii. If I double click on this, you will see this is the money sitting on Bank of Hawaii. We have received money that doesn't belong to us. We have received money that's not our own. So how do we account for the portion of this money that's actually going to serve as sales commission in our account? So let's say out of this 19,002, 9,000 is our own commission. 9,000 is our commission. So I'll come here, I'll go to journal entry, and then you say sales commission. You create sales commission with 9,000, and then you debit. Trade payable is a credit account. When you debit it, it reduces the balance. Trade payable in the name of who? Victoria's Secret. Can you see here? And then you then click on save and close. So this is US based. Then click on save and close. It's after you have saved this that your P&L will now be updated. So let's go back to our reports and then P&L accounts. So you can see here now, sales commission is 9,000, which is exactly what is our own money. Do you understand? This is exactly what our money is right now. So this is the first way to treat QuickBooks for dropshipper, dropshipping companies. That's if you want to create invoice for dropshipping in QuickBooks. So this will help you to track all your sales. Remember, the other money in your account is not your money. Now, would you say that money is a direct cost to you? No, no. You have only collected money on behalf of your vendor. If it was done like this, oh, I would have to buy the product from the vendor. Like, assuming I stocked the product in my warehouse. Do you understand? If I stock the product in my warehouse and I'm yet to pay that customer, then I will treat that product sales. I will treat the other leg as cost of sales. I will treat the other leg as cost of sales. What if I didn't sell the product? What if I didn't sell the product? What would have happened? Then there's no business. So, but if I stock the product in the warehouse and then go out to look for customers, then it's a cost to me. It's a cost to me. For stocking the product, I owe the vendor. Even if I didn't pay the vendor at the point of supply to my store, I owe the vendor using the Accra concept of accounting. Accra concept of accounting states that whether cash has been paid or not, you have to treat that transaction as if it has been completed. That's what accrual is all about. So if I had collected the inventory and I put it on in store, then I would have seen cost of sales right here. So my direct cost of sales will be the money I'm spending on adverts. I'm a drop shipper. I'm not a re- I'm not a, I don't sell directly as if I stock the item. So if I had never sold the item, then there is no business. Would I have recognized the cost? No. So the profit from that sale is what I'm going to recognize as my income. Any direct cost I'm going to incur would not be tied to the product because I don't stock the product. If I stock the product, then there would have been related costs. What are the direct costs of stocking the product? Number one, the cost of bringing them from the vendor store to my own store. Number one. Number two, maybe because of insurance, insuring the product itself. And then number three, the cost of buying the product. And then every other cost that is related to the product, maybe maintaining the product, the cost of the storekeeper. Do you understand? Those are the things that make up what I'm going to charge the customer when I'm selling. But this does not apply to me. Who is going to do that? The vendor is the one doing that. Me, I'm a drop shipper. So my own is to take order, send it to the vendor, and then, so every money I collect should be in my book as a liability until I remit the money to the vendor. So how do I remit the money to the vendor? Then I'll go back to QuickBooks. I'll click on write check. Pay to who? Pay to Victoria Secret. And then what am I going to select here? Trade payable to vendor account. So to show me how much I'm owing. So let's say out of the 10,000, though it's 19,000, I paid 5,000 USD to them. So let's look at the balance in that account first before. So let's pay up everything because you can't receive the full amount of the money and then pay half. 10,226. So here I'll go to 10,226. So this is what I'm paying to the vendor's account. You can see here. And then I'll select the bank where I'm paying the money from, blah, blah, and then click save and close. So I've settled the vendor. If I go back to my report and then select my balance sheet, you can see here, I've settled the vendor. There's no trade payable again. You can see my net income 9,000. This is how a typical drop shipment or drop shipping business should treat their transaction in QuickBooks and not the other way around, where you're recognizing the cost of the product in your book. You're not supposed to recognize the cost of the product in your book because you're not keeping them, you're not storing them. It's only when you store the products that you recognize the cost that is associated to that product. That's when you see your direct cost. So your direct cost as a drop shipper is not the cost of the product because you're not buying to keep. Even if you're buying to keep, you also need to be sure that the cost is not just when you're buying to keep, it's not just the cost of the product, every cost associated with bringing in the product to your store. So when you run a drop shipping business, the last thing you should do be thinking of is uploading inventories. Is not part of the scope, it's not part of setup. You'll be wrong to have done that because you don't store. The only thing you show your customers is the image of that product. So I hope this explains how to create an invoice for dropshipment. We've discussed receiving payments. Then you can just watch other videos to find ideas on how to record expenses. I've done multiple videos on this channel on how to record business expenses, banking transaction, and every other thing you need to know. So, but I would go ahead to discuss that. Okay, so let's quickly look at the direct costs. So here I'll go to Rise Check. Let's say I'm paying Facebook. That's the vendor. Yes, Facebook is a vendor because they provide a platform for me to run ads. So what's my direct cost here? My direct cost is social media ads, which I'm spending like let's say $100 on, and then I'll click on save and close. So if I go back to my reports and then profit or loss accounts, you select all. You can see this is my commission 9,000, social media ads $100. So I have a net income of 8,900. This is a typical account. So if there are other expenses you incur to run your dropshipping business, you can as well post that. So this is a typical account of a dropshipping company. Do you understand? This is how a dropshipping company works. You don't stock inventory, like I said before. You don't keep those inventory. It's not your own. You take order. You're providing services. You're helping customers to source for that product. Then the vendor process delivery directly to the customers address. So that is how dropshipping business work. Then under your banking side, you can do your normal fund transfer from one bank to another. So you can go to fund transfer, you select Bank of Hawaii, and then maybe you set it to Chase Bank. You enter the amount, you click save and close. So fund transfer lets you move money from one bank account to another account. You can actually move money from a local bank account to a foreign based account, and then you click save and close. So this is how you run QuickBooks for a dropshipping business, especially invoicing. So I'm sure you learned how to create an invoice for a drop of shipment company from a vendor in QuickBooks Desktop. If this is the first time you're watching this video, kindly hit the subscription button or turn on notification bell so that you would get updates when I post new videos. And if there are issues you have, if there are challenges you're having in your use of QuickBooks, either desktop or online, kindly drop a comment. I would look at it and then create a video for that. Thank you.